Ladies and gentlemen, good day and welcome to the Man Industries Limited Q2 FY26 earnings conference call hosted by Arihant Capital Markets Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Utsav Benaira from Arihant Capital Markets Limited. Thank you, and over to you, Mr. Utsav.
Good evening and welcome everyone. On behalf of Arihant Capital, we invite you to Man Industries India Limited Q2 and H1 FY26 earnings conference call. From the management side, we have Dr. Ramesh Chandramal Sukhani, Chairman, Mr. Sandeep Kumar, CFO, Mr. Rahul Rawat, Company Secretary, Mr. Gyan Chindani, DPM Investor Relations, Mr. Sunil Wadikar, VP Accounts. So without any further delay, I'll hand over the call to the management for their opening remarks. Over to you, sir.
Good evening, everyone. I extend a warm welcome to all our shareholders, analysts, and participants joining us for the Q2 and H1 FY26 earnings conference call, business highlights, and financial outlook. Q2 FY26 has been an important quarter for the company, both in terms of financial performance and strategic progress. We are pleased to report the highest ever quarterly EBITDA margin in our history, reflecting our continued focus on execution excellence, product mix optimization, operational discipline, and cost management. During the quarter, we witnessed strong traction across our international market, particularly in the GCC region and Southeast Asia. As of 30th September 2025, our executed order book stands 4750. This is as on, not 30th September, sorry. This current order is 4750, with execution visibility spread over the next 6 to 9 months. In addition, we have a robust bid pipeline exceeding 15,000 crore, covering opportunities in oil and gas, water transmission, and a specialized coated pipe segment across global markets. With a strong momentum in execution, we expect H2 FY26 to the strongest half year in the company's history, with revenue of around 2,200 crore, enabling us to comfortably deliver our 20% revenue growth guidance for 2026. Export continues to be an important growth engine for us, constituting about 80 to 90% of the order book. This reflects the growing global trust in our technical capabilities, execution track record, and ability to deliver complex, large-dia pipe solutions. Our strategic expansion. Our expansion initiatives in Saudi Arabia and Jammu are progressing very well, with the full-fledged in the full swing. The Saudi Arabia facility is a strategically important project, giving us manufacturing base closer to our oil and gas hub, and civil activities in progress, and we expect operation to commence by Q4 2026, followed by commercial ramp-up by Jammu plant. Also under progress is planned and expected to be commissioned in April. We are planning to start the production from 1st April 2026. That is our target date. Both projects will significantly strengthen our geographical reach, capacity, and ability to participate in high-value contracts, ensuring diversified growth in the coming years. Looking Outlook. Looking ahead, the outlook for H2 26 remains strong, supported by steady order execution and healthy order inflow. We reiterate our full year guidance of approximately 20% revenue growth in FY 26, driven by timely project execution, capacity expansion, and some diversification and sustainable demand from global energy and water infrastructure sector. We expect to maintain double-digit EBITDA margin above 11%, between 11 to 12 we are estimating, supported by favorable product mix, cost discipline, and operation excellence. Enhancing the share of the value-added and export orders, maintaining financial prudence, scaling up the capacity through our ongoing Saudi Arabia and Jammu expansion. Jammu expansion is a synergic stainless steel seamless pipe manufacturing. With that, I now hand over to our CFO, Mr. Sandeep Kumar Garg, to review the financials. Over to you, Sandeep ji. Thank you. Yeah.
Thank you, Mr. Chairman. Good evening, everyone. Thanks for joining us for discussion on our Q2 and H1 26 financial performance. I will take you through the key financial highlights, margin drivers, balance sheet position, and outlook for our coming quarters. Let's begin with the consolidated results. Revenue from operation for Q2 FY 26 stood at 834 crore, a growth of 3.5% year-on-year and 12.4% QOQ. EBITDA for the quarter grew by 37% YOY to 102 crore, with margin expanding by 340 basis points to 12.5%, the highest ever in our history. PBT increased by 15.5% YOY to 49 crore, and PAT grew by 16% YOY and 34% QOQ to 37 crores. These results reflect our ability to maintain profitability despite a relatively stable revenue base, driven by product mix improvement, cost control, and higher efficiency across our facilities. Now we come to the half-yearly performance. The revenue for the half-year H1 FY 26 stood at 1,576 crore, up by 1.4% YOY. EBITDA grew by 38% YOY to 182 crore, reflecting sustained margin expansion across product lines. PAT stood at 65 crore, growing 27% YOY, with cash profit increasing by 34% to YOY around 100 crore. Our H1 performance demonstrates our ability to deliver profitability growth even in a flattish revenue environment, driven by mix improvement and operational excellence. Regarding balance sheet, as on 30 September 25, we have a net cash position of 14 crore, considering all the debts. Net position is positive 14 crore cash. Now I will update the investor about the demand environment and industry tailwind. The global investment in energy transition, upstream oil and gas, hydrogen transportation, and water infrastructure continue to accelerate. The GCC region in particular is undergoing one of the largest pipeline investment cycle in recent years, driven by large-scale gas pipeline corridors, expansion of hydrogen-ready infrastructure, desalination and water distribution projects, and mega EPC development under National Vision Program. We believe this industry tailwind will sustain multi-year demand visibility for high-quality line pipes, and man industry is strategically demand visibility for high-quality.
Sorry to interrupt, sir, but can you repeat again? You were on mute.
We believe this industry tailwind will sustain multi-year demand visibility for high-quality line pipe, and man industry is strategically positioned to capture a meaningful share of this opportunity. On the domestic front, we are closely tracking tender announced by various state governments like Gujarat, Andhra, and Odisha in the water infrastructure segment. The pipeline of domestic water projects is healthy, and we expect improved traction over the next 2 to 3 quarters. With this, we would now open the floor for the question answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Thank you so much for taking my question. Hopefully, I'm audible.
Yes, you are. Yes.
Yeah. So firstly, it's a great set of results, sir. Really happy with the company's performance. So, just wanted to, that this year we've given a very, good guidance. Now for next year, when, we have major plants operational, how do we see FY27, like the ramp up of the facilities, how would they, be, sir?
27, our existing facility plus Saudi and Jammu both will be operational. So roughly we will be touching around 7,000 crore revenue by FY27, which will have a contribution from Saudi operations, Jammu, and our current operations.
So the 7,000 crore is a really great, target to have, sir. So we have enough order book for that, because from the order book perspective, I think we have around 4,500 crores, right, sir?
That is correct. This order book is currently for India operation. When we start the Saudi operation, that order book will further add to our order book position. So currently, Saudi and Jammu plants are not operational, so we are not declaring any order for those plants. But we are in discussion with different potential clients, and almost negotiations are at final numbers. Once we give them the production start, we will have a confirmation order from them. So we are hopeful of getting this guidance which we are declaring now.
Okay, fair enough, sir. So, if possible, could we know how much will come from Jammu plant? I'm asking because that's the stainless steel and has a very high margin. So, in the 7,000 crores, will we have any blended EBITDA margin target? Because both Saudi and Jammu and Kashmir are margin accretive to us, right?
Yes. You are right. And the Saudi will be the SAW pipes, and Jammu will be the special steel, SS tubes, seamless tubes business.
So margin,
yes, sir. So
sorry. Higher?
Both will be higher. You can say Jammu will be around 18 to 22 Jammu, and Saudi will be between 12 to 14. 14-15%.
Yeah. So on a blended basis on 7,000 crores, how much can we do, sir?
7,000, we should reach around 800 crore.
800 crore plus. This is on the conservative side. Because Saudi, our EBITDA will be better also, because their margins will be better.
Okay, that's really great to know, sir. And just because of this, so when the plant starts operationalizing, I think both plants combined, we spent around 200 crores. So the depreciation and interest will hit in FY27, right, sir? So how will our debt position be like once, what will be the interest cost if we have any estimation regarding that, sir?
Our peak borrowing will be around 1,150 to 1,200 crore.
Okay.
Projects will be implemented.
And what is the cost of debt to us then, sir?
Let me conclude. I'm talking about peak borrowing gross. Just like we have declared 14 crore net cash position. So this is the gross borrowing level, 11,150 to 1,200. So roughly our interest cost will be around same 120 to 125 crore in 1 year, including all three plans.
mix of the dollar and rupee. That's why dollar would be around 6%, rupees will be around 8 to 9%. So we are estimating the
interest cost will be around 120.
Oh, okay. That's a really great figure because I thought, with the new, we'll have some working capital requirements also, right? Because right now only we are at 30 crores, I think, so run rate of interest. So while we go for 7,000 crores, will we need some working capital which will, increase our interest, sir?
Not interest, but actually the non-fund based limits you use more because the performance bond and ABG, PBG, retention bank guarantee, etc. We have to give more in future. But since the operation level also increasing, so then it is going to just accordingly.
Okay, fair enough, sir. Yeah, that's it from my side, sir. All the best, sir. Thank you so much, sir.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Satyan Vadva from Profusion Investment Advisors. Please go ahead.
I have two questions. One, can you let us know what the volumes were for the first quarter and the second quarter? And what volume are you estimating from the Saudi plant and the Jammu plant in FY27? And what are the current average selling price per ton for both of these plants? Average in terms of the mix of products that you're expecting to do from these two plants.
Your question is not very clear. The reason, you want to know the per.
I can ask again. Is this clear now? Am I audible now?
Yes, please. Yeah.
Yes. So my question was, what was the volume that we did in first quarter and in the second quarter, which is the September quarter? And secondly, what is the volume you are forecasting from the Saudi plant for FY27? And what is the average selling price of the products that you intend to make there? And secondly, what is the volume you are forecasting from the Jammu plant for FY27? And what is the current ASP based on the product mix you are envisaging for Jammu?
Yes, Satyam, well noted. Our Indian operation, the first 6 months is around 40% of our estimation. Now there will be around 60% for next H2. As regard to Jammu, there will be projections. We are doing first year around 500 crore because the new unit, it will slowly will ramp up. And Saudi, we are estimating because of some dialogue is going on, etc. So we are estimating around 1,500 around 2,000 crore. So that's why the company is expecting to reach 7,000 crore 26-27 closing.
Right. So basically, the new plants will contribute around 2,000 to 2,500 out of like 7,000 crores, right?
You are right. You are right, sir.
Okay, great. So, and in terms of the Jammu plant, this 500 crore would be what sort of volume? Would get you to 500 crores. Capacity is 22,000 tons, right?
Yeah, capacity 22,000.
You can say it's 1/3, around 40% in the year 1. Then year 2 will be around 70%, 60-70%. Yeah.
Okay, that's great. And for Saudi, from the 3 lakh tons, what do you expect the first year volume to be?
First year volume, as we estimated, around 2,000 crore first year. Then subsequently.
Right. So, no, in terms of tonnage.
Tonnage is very difficult.
Or utilization.
Oh, only I am talking about the.
Usually, I'm just trying to get a sense of utilization, right? What sort of like you said, 40% utilization in Jammu, then 70, then maybe 80 or 90. What would be in Saudi in the first year in terms of utilization?
Saudi you can consider around will be the first year around 50%, and it will ramp up slowly for the next year. because a lot of equipment, etc., will be added in the first year, and then you get the good result after first year, second year it will go up.
And orders are not a problem in Saudi, given that your plant is there. You're probably already sending pipes from India, so I think you should be accredited, right?
No, there is not a problem because we are a very qualified company and we are experienced on other markets of the export. So I don't think so any problem is there.
So when will you start booking orders for the two plants, Saudi and Jammu, in the next quarter? Or will that start only in first quarter next year, fiscal?
Discussion is going on. Very soon, maybe first quarter, we will book some orders and then we will see how it is going.
First quarter means quarter 4 of this year?
First quarter means already. Yeah. First quarter.
So Jan to March quarter, right? You'll start booking orders.
Yes.
Okay.
And track production will start next quarter, as in the Jan-March quarter?
We are trying to, in the first quarter means your quarter 4, we are going to start some production.
In Saudi?
In Saudi.
Jammu will be... Equipment is all in place in both the plants, or you are still waiting for some equipment to come?
Most of the equipment in Jammu already arrived from Europe and Japan.
Right.
And Saudi is already there, is equipment there. Some is coming, but mostly coming. Mostly already there.
Okay, so I'm just trying to get a sense of readiness of the plant. So trials will begin in the next maybe 8-10 weeks, right?
Yes, roughly, as we told January, we are estimating 8 to 10 weeks saying the same. But this is the expectation which as per our calculation should go through it. Yeah.
Okay. Great. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, a reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Divyansh Thakur from Finterest Capital. Please go ahead.
Sorry, sir, if I'm repeating the question. Actually, I joined late. So, as you reported the EBITDA margin of 11.5%, do we see this continue going forward with the new capacity, as you mentioned, coming live on April 1, 2026?
Yes, the EBITDA margin, guidance we have given, we will be 11% plus. So we are going to maintain EBITDA between 11 to 12%. We are going to maintain same EBITDA in this year.
Okay, that's great, sir. Sir, also wanted to know the update on the order issued. If you can give us some details, like how that is going.
As of now, we have order book of 4,750 crore. 90% of those are exports. 10% are...
No. Sorry to interrupt you, sir. No, I wanted to ask about the SEBI order.
SEBI order?
SEBI. Yeah.
SEBI order, we got the stay order immediate after the order in few days, and now the matter is sub judice.
Okay, thank you so much, sir.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Once again, a reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Haley Shah, who is an individual investor. Please go ahead.
Thank you for the opportunity. I wanted to ask that Q2 revenue was slightly lower Y-on-Y despite a strong order book. What would be the reason for this revenue, which was lower than expected?
Madam, our business is like nature, the lead time. Every order having the different kind of the raw material. So once we get the order, although the order book is very good order book position over there, but once we receive the order, some raw material few weeks, some raw material few months. So that's why we have to see the priority. Now, all the orders are under execution, and you will see the great growth in coming quarters.
Okay, sir. The next question is, the Saudi project is expected to commercialize in Q4 FY26. So what proportion of the 6 billion project cost has spent so far? And are we on the track for commissioning this project?
No, your question is not clear. The order is, I already indicated, the discussion is going on with the clients, and the facility is under progress, and we can give not month-wise or quarter-wise projections for the new company. The overall, as I already indicated, 2,000 crore, we are expecting the revenue from Saudi in year 1 and 500 crore in Jammu in year 1.
Okay, sir. Thank you. That's it from my side. Thank you.
Thank you. The next question comes from the line of Nishta from Sapphire Capital. Please go ahead.
Yes, hello.
Hi.
Hello. Yeah, so I just wanted to understand from the 7,000 crore of guidance that you've given, what will be the contribution from the Jammu plant, from the Saudi plant, and from the current plant?
This is we already indicated once again, we will repeat it. Operation would be around 4,500 crore. Saudi will be 2,000 crore. And Jammu will be around 500 crore. This is our wish and plan to achieve next year 7,000 crore.
Okay, understood. And you mentioned that from Saudi we'll have better margins. Can you give a number, how much better are the margins in Saudi from the current plant?
Madam, the Saudi EBITDA, we can give the guidance of EBITDA will be between 12 to 15%. On product mix, client, grade, lot of question is there. Moment we can give this idea. And Jammu, as we already informed, between 18 to 20, 21% EBITDA as per the product mix, ally, and the clients. So there are a lot of calculation, but the overall HB is 7,000 crore. The EBITDA would be more than 800 crore.
Okay, understood. Thank you.
Thank you. The next question comes from the line of Viraj Mahadeva from MoneyGrow. Please go ahead.
Hi, sir. I had a quick question. Congratulations on the traction in the business. Regarding your expansion, it's a 1,200 crore expansion overall. However, the capex this year is showing as only 57 crores. So can you explain how 1,100 crores will be deployed for the plant to be ready in 4 or 5 months?
No. Sir, the 57, our equity portion is already gone in Jammu.
Okay. Understood, sir. How much is that?
Maybe 210.
For Jammu, almost 200 crore we have invested, and some of them were invested last year also.
Last year. Then we have to see the overall 2024, 25, 26.
Yeah.
The other things, lot of LCs, letter of credit, already taken by the bank, which is not debited to our account.
Okay.
So this is accounting, and that's why this.
So how much is pending for investment overall between debt and or equity for the plants to be completed?
This 1,200 crore, whatever guidance we are giving, just Mr. Garg.
So as far as Jammu is concerned, so we have a project cost of 595 crore. Our own contribution, almost 200 crore we have invested. Total order committed, LC, everything is around 200 crore. Roughly, we are in the positive of 400 crore investment already done into Jammu project. When payment will be done, you will get the capex value debited.
Okay.
Mr.
Understood.
Viraj, can you please mute your line after asking a question? There's disturbance in your line.
Understood. Thank you. That's it from my side.
Okay, thank you.
Thank you. The next question comes from the line of Prakash, who is an individual investor. Please go ahead.
Hi,
Sir,
Prakash.
very good evening. Sir, very good evening. Thank you for taking my question. And congratulations on good set of numbers. Sir, my
Sorry
question
to
I missed out,
interrupt.
sir.
Sir, please continue. There was a bit disturbance in your line, but it's clear now. Please go ahead.
Am I audible now?
Yes, sir.
Okay. Sir, congratulations on posting a good set of numbers. I missed out, sir, what will be the blended PAT or EBITDA after commissioning of Saudi Arabia and Jammu plants, sir?
Saudi will be, EBITDA will be between the range of 12 to 15%. Jammu project will be of 18 to 22%.
18 to 22. And blended PAT of both the after commissioning, sir?
Blended will be coming around 13%, around 13 to between 13%.
Okay, sir.
What EBITDA? 13%.
Okay, sir. That's great, sir. My next question is regarding order book, sir. What is the present bid pipeline more than 15,000 crores? So what is the successful conversion of this, sir?
Sir, there is a very difficult question. We can say 15,000 bid we submitted, the different
Yes.
evaluation stages, and how much we will get, but we are very confident to get whatever we need to run the plant and our expansion program and diversification, synergic diversification program. So we are confident we will get the order. Percentage I cannot say because of something new coming. Maybe tomorrow some materialize, maybe after 2 weeks, 3 weeks. That's very difficult to say.
Okay, sir. That's it. Thank you very much, sir, and best of luck for the future endeavor.
Thank you.
Thank you. The next question comes from the line of Karishma Nahar, who is an individual investor. Please go ahead.
Good evening, sir. I wanted to know regarding the gross profit margin, which increased from 20% last quarter to 28% this quarter. And in the sector, it's like as per my study, I saw that in this particular quarter, raw material prices increased. In spite of that, our gross profit margin saw 800 basis point increase this quarter. So can you put a little light on that?
Sure. First of all, whenever we get an order, we hedge our purchases. So recent increase or decrease in the raw material prices doesn't affect our profitability because our raw material supply is hedged at the time of booking the order. So that current price change will not impact our profitability. Second, the profitability has been higher because of it was explained by Chairman in our opening remark, because of product mix. Product mix and the better operation synergies. Value-added product also. We are executing some order which has a high different type of coating, a value-added product, which is giving us a better margin.
Okay, that's it from my side.
Thank you.
Thank you. The next question comes from the line of Rohan Rawat, who is an individual investor. Please go ahead.
First of all, congratulations, sir, for posting your Q2 results. So my question to you is on the US market. So as I can see, you have a good presence in the Saudi and the Middle East market. So what's your plan to increase on the US market, seeing your competitor Welspun Corp has a good presence in the US market? That's my first question.
US market look good, but currently we don't have any plan. Currently we are executing 2 big projects, Saudi and Jammu. Our chairman.
I think I can give a good reply. let's concentrate on our right now the two projects on our hand. Further 3, 4, 5 months we will be very busy over there to stabilize the thing, and then we will talk about the other market in the world.
Okay. I think that's answer my question. And also you speak about the order book, which is your 15,000 crores. And I want to know what's the bid-win ratio on it. And I think you have a 40,000 crore order book, which will be getting exhausted by the 6 to 9 months. So I just want to know your bid-win ratio on a 15,000 crore bid pipeline you mentioned in the call.
Yeah, no ratio cannot be defined, but we are very confident the carry forward order on the 1st April and then plus clear over there, so we will be able to achieve whatever our target is there for next year. So we are confident.
All right. That answers my question. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Rohan, who is an individual investor. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, I had a question. With the steel price being so volatile, how is the company affected by it currently?
I just explained in the previous question that our company's policy is very, very fixed. That once we get an order confirmed from the customer, immediately we hedge our raw material.
The long-term
arrangement from the supplier for the whole project, that particular order, raw material is hedged. Similarly, my shipping cost is also hedged. So all these fluctuation doesn't affect our profitability.
We don't believe in the speculation.
We don't believe in speculation. Our policy is very, very fixed.
All right. Okay. Thank you, sir. Sir, our next question was, why has the inventory shot up so much, and will it normalize going forward?
If you see our balance sheet for September, inventory has reduced from the March level because some order which we are executing was dispatched. So inventory has already reduced. If you see the balance sheet in September.
Again, this quarter will be more reduced.
It will be further reduced on the shipment for further because
inspection.
Our order book is good and we are anticipating good sales in Q3 and Q4. So inventory will further normalize.
All right. Thank you so much, sir. Thank you.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Puneet Chokani, who is an individual investor. Please go ahead.
Hi, thank you for the opportunity. I just wanted to understand a little bit more about the Saudi plant. I'm sorry, it's a basic question. So what I understood from the call so far is this plant that is being set up is primarily for the Saudi market. This is not for the export market. Is that correct? Is that fundamentally right?
Yeah, this market factory will be primarily servicing order from the Saudi Arabia, but there is no bar to supply to other GCC country or Middle East from that plant.
Okay. And so just to understand, I mean, of course, you see a lot of potential. If you can give us some numbers in terms of how big volumetrically this market is in terms of Saudi. And two, I mean, considering that there is potential in your setting this up and you don't want to disclose orders, it's very clear that you've got soft commitments, which is why you're setting up the plants. If you can throw some light on that also, please.
Yeah, very intelligent guess. Okay. There is a sufficient room for us over there, I can say. There's sufficient.
So could you quantify volumetrically? I mean, I understand pricing is very different for different products, but just volumetrically, how big is this market? And I just want to get, since the chairman is on this call, I also want to just get a sense of, I mean, how big this. I mean, today you're talking about 4,500 crores coming from the Indian market. You're talking about 2,600 crores at 50% utilization coming from your two plants. I want to get a sense of how big Saudi as a market can be for the company? Means, say, once you stabilize, whatever commitments you have, whether you want to disclose it or not, that's up to you, of course. But how big can the revenue from a business like this reach? Because it's clearly a very profitable business for you, is what you're sort of saying, right?
The most important I want to comment here, this is a new company started. We are the old in the business, so we have the sufficient study in the market. The figures, this moment I do not remember what is the exact figure, but whatever we are talking about this moment, the 50% capacity utilization year one, that's why we said 2,000 crore. But next year will be capacity more, and we have the good room over there to satisfy our requirement, which I can say.
Regarding Saudi, I just want to add something here. The Saudi is developing a huge demand for pipes.
So I think we have given the very conservative figure after considering all the market, etc.
Sir, I understand. Sorry to interrupt. I'm not asking for guidance, sir. What I'm trying to understand is how big the market can be, how potentially large can this be in terms of revenue for a business, say, 5 years from now. I'm not asking for a 1-year guidance, sir. I understand 50% utilization will bring you a certain amount of revenue. But just to understand size, even if you don't give me volumetric numbers, how big can this business be, say, 5 years from now is what I'm trying to get. Can it be a 4,000 crore, 5,000 crore business is what I'm saying.
You are right. You can guess it. This is the beginning of 2,000 crore, or our aim to reach next year maybe 4,000
or 3,000 or 4,000, whatever.
3,500, 4,000. Which estimation which we are being worked out.
Okay. And so like I asked, is there, in terms of, I understand volume, but do you have some soft commitments? So, how do you, just want to get a mindset, sir. Since you're on the call, you spend so much, today it's a lot of money, 600 crores, 700 crores of capex.
Very confidential business.
Yeah.
This is a public forum. Once you meet one-on-one with one of the investment officer here, this is an open forum. So our business is confidentially based on tender, offer, government, approvals, lot of calculations are there, sir.
Right. Okay, so an export can be an optionality also, is what you said from Saudi.
Yes, sir. In countries over there. You understand?
Okay. Also, sir, just one more question. I heard you gave a guidance of 20% for this year, for FY26. On a console level, if I see your half-yearly number, you went flat. Your revenues went, I think, about 1,576 crores. So if you have to grow 20% for the year, you're technically talking about a back-ended growth. So your H2 should be about 35% growth. Is that what you're talking? Is my thinking right?
I can simplify your question. 40% already done in H1. H2, our figures between 2,200 to 2,400 crore, roughly. So 40-60%, considering the order on hand, each time, client requirement, because we are a special contact business, so client requirement also we have to consider. So a lot of calculation over there, but we are confident to reach on this level, sir.
If you look at our last year's number, our business was 3,178 or 172 crore. Balance was from the realty.
Which will come now.
Which will create. So if I look at the pipe business, 20% growth will happen. And H2 will be 2,200 crore, as chairman said, to 2,400 crore. We will be around 3,700 crore from the pipe business.
Okay. Sure. So there was a real estate, I'm sorry if I can ask more questions. There was a real estate angle also, right? There was something in Andheri or something in Bombay that you guys monetized. Was there any income that came in through for that this quarter?
No. The project which we have monetized, the developer is seeking all the legal approvals. That project, after he got all the environmental and other approval, he will be launching it very soon. Once he launches, then the sale will start and we will have some revenue coming to our financials.
There is some staff commitment. There are some commitment, but after the procedure completed, RERA approval, everything, then we can only officially sell the stock. Yeah.
So the thought process, if I'm getting this right, please correct me. Basically, it's your land. There's a developer building on it, and you basically have no expense. The developer does the marketing, and you just get a share of revenue. Is that correct?
Correct. Yes. We will get our portion on top line.
On the sale of the project. And what would this be over a period of years till, of course, till he launches the project and pre-sells and sells out, collects the money and gives it to you? What is the total quantum of money that you will get out of this?
A year horizon, and it is going to start quickly, very soon.
Sorry, you broke off, so I couldn't hear that. Your line broke off for a second.
Well, I will confirm. We have a horizon of 5 years to get this revenue monetized.
Right.
But once project will be launched, we are expecting 700 crore at the conservative side to be received in next 5 years.
So this 700 crores will have no expense is what you're saying?
No expenses, nothing.
Okay, so in your P&L, you will put it as an extraordinary income, or how does this get classified as a line item?
This transaction is into our subsidiary, Marino Shelter. It will be a sale in that subsidiary, and it will come as a consolidation in the consol financials, which will be shown separately under the segment reporting.
Yes, there will be.
Okay, fair. Thank you so much for your time, sir.
Thank you.
Thank you. The next question comes from the line of Atul Kumar, who is an individual investor. Please go ahead.
Thank you, sir, for the opportunity. I would just like to appreciate the effort management has put into since last few years. I've been following this company since last 2-3 years, and really meeting all the guidance given in previous quarters and commentaries. So just want to appreciate all the effort. I have a question around the PAT margin for FY27, since we are now setting up 2 plants and we are going to expect increase in EBITDA margin. So do we have a profile, or do we know how the PAT margin is going to look in FY27? I think last quarter we did 4.5% in the PAT margin. So any guidance or suggestion on that, sir?
It will be slightly improve as EBITDA is going to improve. It may slightly improve, but we have an increased finance cost also.
Little finance
cost also.
Depreciation
also.
And tax.
So if you want, you can connect with our IR department, and requirement, whatever you want, we can share.
Okay, but sir, like EBITDA margin, do we not track or have vision of where the PAT margin you want to hit in, let's say, come 2 years? Like, is any guidance there, sir?
It will be in the range of 5 to 5.5%.
Oh, okay. Good. I think that's helpful. Thank you, sir.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Divyansh Thakur from Finterest Capital. Please go ahead.
Sir, sorry, I didn't hear what did you said about PAT margin would be 5 to 5.5%, if I'm right?
Yes, that's right.
We already informed you EBITDA, and then we are depreciation, interest, and tax, and then it is going to improve it.
Okay, so you are saying that it will be around 5 to 5% after assuming and estimating all these things, right?
Yes, correct.
Okay. Thank you so much, sir. All the best for your future efforts.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. As there are no further questions from the line of participants, I now hand the conference over to the management for closing comments.
Alan, sun lo usko bhi.
Thank you very much for all the investors for attending this call.
Hello?
Yes, sir. On behalf of Arihant Capital Markets Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.